Good evening and welcome to Weaving Web3 with me, James.
Me, Chris.
Me stash.
That long pause was Chris plugging his brain in. He's here now, he's locked and loaded, he's ready to go. This week, we're going to talk about a few things. Now, our previous episode was recorded pretty recently, actually just before we knew about the Silicon Valley issue. Came out live on air for us, and we saw it 5 minutes afterwards. So we're going to talk about Circle, which we had mentioned. I think we mentioned slightly about it, but we mentioned about the falling Bitcoin prices. That actually came true, not entirely for the reasons we discussed on the pod about the release of the Bitcoin from Mt. Gox, but at the same time, it did come true. You know, a broken clock's wrong twice a day, isn't it? So we're going to talk about Circle and the Silicon Valley Bank, and then our second one is I'm going to talk about a few tactics and things that people do in crypto to make money, and I just want to ask the boys about what they think the ethical repercussions of those things are. Do they think they're all okay to do? So are you guys happy for me to still kick off with the Circle and Silicon
Go
Valley?
for it.
Right. Okay. So for anyone that doesn't know, it's been pretty big news. Silicon Valley Bank is a very large bank in the United States. They are heavily involved in cryptocurrency and fintech and tech firms. So they provide a lot of financing for companies in the UK, companies in the US, companies wherever, to get fintech startups off the ground. So there's obviously a lot of risk in startups, but you can get massive rewards. So these guys were specialists in catering for that. Because they were specialists in catering for that, when cryptocurrency came along, they said, we'll give this a go. And they turned into the fact that they could actually make quite a lot of money through cryptocurrency. The problems have come now, though, that when a lot of your clients are linked in with cryptocurrency, a downturn in cryptocurrency in the stock market, etc., hits you even harder than it hits other banks. Because if you're, brick and mortar mortgages, they get paid. People struggle or interest gets missed or whatever, but you've got an asset to sell, they get paid. The cryptocurrency firms, for example, like FTX goes down, that's it, you're out. And yes, you'll get money back on liquidation, but that might be 5 years' time, 10 years' time. They don't know when it's going to happen. So you end up with a cash flow shortfall. And it's long term, they probably have assets. They do have a lot of assets, but they have no liquidity. They've got no cash flow. And businesses die with no cash flow. That's like a cardinal rule. You can have as many assets in the world as you want. It's like having a big car and you're driving, living in a big house. But if you can't afford to pay the mortgage and the finance payments, you're done. So you can sell the assets, but again, their assets aren't that liquid to get the sale on. So then what happened is people who were also banking with that bank, when you've got no money and you start a bank run. Are you two both happy with how a bank run works? Mm-hmm. Yeah.
Just for the
yeah, of course. So, have you ever watched It's a Wonderful Life?
Yes, yeah.
There is a fantastic explanation of how bank runs work in that film. So, he owns the main guy in the film. People kill me for not knowing his name. He runs a mortgage and loan. It's essentially like you don't really have them anymore. We used to have a lot of them. Building societies in the UK. So
yeah, I've seen like building society stuff. And, yeah.
So what building societies were created for was to help people build their homes. So you would lend your money to these people. They would then get the funds and loan it out to people to build houses, a building society. Okay. Right? So that's how it functioned. If your money's in that bank, though, in the building society, which is what happens in the film, and you hear that they've got no money, what you do is you go down, I'm not going to lose my money. I'll go and take my cash out now. The problem is, and this is all small scale, this is imagine one town building society. The problem is they don't keep that much cash. Banks don't have cash because the cash that you want to get access to, that you've put in as, a loan or you've loaned them to get some interest on, is not sat in the bank. It's sat in your next door neighbour's house or that house over there, paying interest back. So if you all go at the same time and say, I would like my money back, they cannot do that. It cannot happen. And that's what a run on the banks is. So everyone comes in and says, I want my money out. And the banks will start to pay people out at the beginning. And they will run out of liquid cash. And they will then say, we can't pay you anymore. At which point, more people try and leave. And the whole faith and trust collapses.
Isn't that like a serious flaw in the whole banking system?
The banking system is I don't want to use that word. I was going to use a different word. That is exactly, banks are over collateralized. They are allowed to loan out. I think it's a hideous percentage. You wouldn't believe the percentage that they're allowed to loan out. So if you sort of gave them 30k and they loaned out 30k, they could, and then somebody else took a loan of 30k, they could loan out that other 30k. They could keep loaning money. It's a nut system. There is not there since they separated from the gold standard, they've essentially been able to make as much money as they want.
Mm.
So as long as they're in certain limits, but the regulatory boards have set, they can loan out money as much as they want. But it means that a bank run is a lot easier to do. And people will be going, okay, so how does Silicon Valley Bank and this run on the Silicon Valley Bank affect crypto? Well, USDC, which is a stable coin pegged to the US dollar, is run by a company called Circle. Circle had 25% of their cash reserves sat with Silicon Valley Bank. So what does that mean? So their currency, they've always claimed, is 100% collateralized. So for every $1 of USDC they've issued, they have $1 in the bank, right? But it doesn't work out exactly like that. So 77% of it, which is $32.4 billion, is in US Treasury bills. Treasury bills are backed by the United States government. All right, so they are like a bond. You know, you can do bonds in the UK. The government will pay you on those. But the government, the government will pay you $1 for every dollar you've got in there. They guarantee it. They are super safe and they pay very low interest because they are super safe.
Yeah.
And all of those, they said, had at least a minimum, I think it was 3 month was the maximum time they had to mature. So what you do is you lock them in for 3 months, a bit like staking, and then they pay you the interest. So they've got those, which are 3 months, that's relatively liquid cash. 23% of it, so 100% less than 77, so $9.7 billion, was held across a selection of banks in liquid cash, because they deemed that 23% was enough to cover any runs, any liquidity bits that they needed.
Yeah.
25% of that, 9.7 billion, so $2.5 billion was sat within Silicon Valley Bank. And this lack of cash and essentially the lack of faith that they suddenly weren't collateralized one-to-one caused USDC, a stablecoin, to depeg down from $1. So that's how that all ties in. But again, this is what have we had? 5 black swans in a year, in 12 months. It's oh god, here comes a black swan. At this point,
more to come.
At this point, I don't think there's any white swans left.
Just remind me.
There's definitely gonna be another bank collapse.
The depeg was the key word, wasn't it, with Luna? Like USDT depegged, and like it depegged previously, but
It was only a few cents, but it wasn't as major as USDC.
The only so BUSD and USDT are the most stable. Everything else dropped a good percentage, which is nuts. But then also Bitcoin dropped again massively, which is great because we can DCA in again, fab. But that dropped again massively. I think that when we look at this and the difference between, so yeah, right. Sorry, I'll finish the Circle bit and then I'll get back onto, because I do want to talk about Luna. So that's sort of how the Circle USDC situation is happening. From what I've seen from Circle, actually, even if they're collateralized 90-odd%, it's still pretty good actually, because they're regulated as well. I think the government will say they have to always buy $1 of USDC for $1. But I suspect as well, their margins are pretty thin, but they can probably make that money back in some way. I doubt that the fund running it doesn't have other assets to cover that. But what probably happen is they'll find other funds or get a loan from somewhere else to make up that shortfall if they need to.
Yeah, I saw a few tweets that the basically the Federal Reserve is going to repay the deposits, and basically that they have only like a few percent that is left in the banks. They were able to get some of it, so I think it's only like 9% left in the bank.
Because the thing is, they are owed that money back from the bank. Like when it goes to liquidation, they'll probably get pennies on the dollar, but it might get 80 cents on the dollar or something. But they'll still get the majority of that back. So it's just that could be in 5 years' time, like we discussed. So they need to have some sort of shortfall in there. But I actually think they're big enough boys. And like those numbers we were chucking around was what, nearly $40 billion? And these guys seem sensible. Now, Chris, you brought up Luna depegging, right? Either of you two know the problem with Luna's depeg versus USDC depegging?
Majority of their collateralized assets was in Luna, their own token, compared to the BTC.
Bang on.
So it was kind of like a sort of, I don't know, what's it called? A dragon eating its own tail. Like as it went down, obviously the collapse went down as well.
Yeah, absolutely. That's the thing.
Just very stupid on their behalf.
But it's why, and this is the difficulty with crypto is why does USDC's collateralization work? Because it's in fiat, and that's the tricky bit, isn't it? Because the only thing keeping that crypto up is fiat. But what keeps fiat up is taxpayers. So it's really difficult because what keeps fiat up is taxpayers being forced to pay tax. So that's what stables fiat. But then we're using fiat to stable crypto, which I'm not against. I think that's a perfectly good idea and it actually works. But like Luna, that was crypto relying on crypto, as soon as crypto takes a dump, it just dies. Yeah. And I think that's a very difficult thing to get around. But from everything I've seen from Circle, they actually seem very well run in comparison.
I'm guessing they have they repegged yet, or
not yet? It's getting close, but banks don't run on the weekend, so the only way that they can recollateralize essentially will be on the Monday.
Yeah. And that's the thing as well, linked into the fiat system, the stocks and shares. Crypto doesn't shut off at 5 o'clock on a Friday, but the other things do. So it's difficult, isn't it? We'll essentially see Monday morning. Probably will it depeg lower again first thing and then go up during the day?
Yeah, I did see a tweet that Justin Sun minted 20 million USDT because Binance is opening USDC 30x leverage on Monday.
Well, the thing is though, right, boys, this USDC depeg is an opportunity for someone.
Oh, absolutely.
But say you're let's say you're like someone massive, okay, like a big boy, right? You run Coinbase or you run whatever. If you run Coinbase, can you go in and say, actually, what we'll do is we will provide you the, what's your shortfall? $1 billion. Okay, we'll collateralize that $1 billion, and we'll take a percentage going forward. But those are things that could happen.
Well, I bought I bought a bit of USDC at 94 cents, and I put $50 in it, and from USDT, so I obviously got more than 50 USDC. I'm hoping that maybe that 50 USDC is going to be worth once it repegged.
Did you see the guys selling to Robinhood? Collection of guys were buying USDC all the way down because Robinhood had it hard locked that they were buying at $1.
Really?
So they were buying as much as they could, selling to Robinhood, and then using those same funds to buy again and sell to Robinhood again.
Oh my God.
Crazy.
They were making thousands of dollars, but you had to have, obviously the margins are thin, aren't they? Right?
Yeah.
Because if you've got 10k, what do you make? £50?
Yeah.
For 10k in on, but at the end of the day, if you can get
enough times,
if you can get a 5% return every 50 seconds or every minute, that's not a bad return.
That would be 500 quid, wouldn't it?
Oh, sorry. But yeah, sorry. If you got in my head, I said $1,000. If you had $1,000, it'd be 50 quid because I looked at it. Those were my numbers. 10 grand, 500 quid. But again, it's not massive profit on 10 grand. But obviously, next time you do it, you're doing 10,500. So you could compound it as well. You would see compounding 5% interest as many times as you could do it. And that's obviously when the price was going down to like 0.88, that's 12%, isn't it? It's actually more than 12%, but
So what did it go down to? Like how
0.88 was the lowest it dropped.
was the drop to?
Yeah.
Wow.
Do you think that's pretty big
I
return?
did panic sell majority of my USDC just in case. But I think it was I lost like $20 out of like the hundreds that I had, but I don't give a shit. Like I think just in case. Peace of mind so I could sleep. Even though I knew it probably repeg. And then I stupidly bought more USDC.
Well, cover some of your loss. But the thing for that is like there's always an opportunity, isn't there? Whenever there's something happens, there's always an opportunity. But like it's noticing that, you know, Robinhood's gone, oh, we buy that for $1. And you think, hilarious, fantastic. I'll sell it to you for $1.
When it's Robinhood losing, then you're like,
exactly.
Yeah.
I mean, at the end of the day, don't hard code your purchase price or something. I don't know how they did it, but they must have done, because it wasn't reacting to the market. But yeah. So right, that, boys, leads me on to. So I think we've covered what's going on with Circle and Silicon Bank pretty well.
Mm-hmm.
To be honest with you, we probably suspect that USDC is going to bounce back and be okay.
Yeah,
but no guarantee on
hopefully
that.
by the time we upload this podcast, right?
Yeah, exactly. By the time this hits your screens and ears, hopefully it'll all be sorted.
But then again, the thing is, whenever I'm hopeful with anything in crypto, it seems to go the other way.
Agreed.
So, yeah.
Right, and now this is a question I need to ask you, lads. Okay, so there are some people that do things in cryptocurrency that are perfectly legal, but are we okay with them doing these things, and do we think they're right? So I'll start basic off for you boys, right? Do you think what those guys were doing with the buying USDC, selling it to Robinhood, all fine?
Yes.
100%.
Yeah, cool.
100%. Screw Robinhood. Especially when it's a big major corporation losing, like Robinhood, who have screwed over cryptocurrency users.
Yeah, the whole GME debacle.
Yeah, the whole GME thing really, really pissed me off. Like, Robinhood can go and die in a hole. But go on, yeah.
So no, that's good. So as long as so pretty much victimless, like not individual victims, like big institutions that have got deep pockets, we're fine with, yeah. So that seems like a reasonable thing to do. So we're happy with that, right? That's sort of step one on my get. So all right, we're happy with that. That seems reasonable. That's your cock up. If you should have done your research better or whatever on that.
Yeah.
What do you gents think to people who do stuff like floor sweeping NFTs and then setting a new higher price? Is that fine?
Yeah.
It's a strategy. It's a strategy which could backfire. So it's a risk. It's a risk to the person, right? So
absolutely.
If you buy, I don't know, 10 or even 100 floor NFTs, right? That obviously pushes the price up. But what then happens, because I saw this actually happen recently with Happy Land gummy bears, because there was like some people buying, not very many were listed in the first place. That I think only 1% of all the Happy Land gummy bears were listed. But yeah, somewhat like a buying pressure sort of started because there was some news about something. And so people started buying, and the floor price went all the way up to 0.06.
Yeah.
Okay.
0.06. And then obviously when people realized, they listed it lower, and then the buying pressure like match that, because the people who wanted to buy had already bought. And so now I think it's back at 0.02. So like it's a strategy which could pay off, but the person is risking
a lot.
At risk.
Yeah.
He's risking a lot. So if you want to do that, I am 100% fine with you doing that.
Cool. So right. So we're happy. Big institutions losing, not a problem. And we're happy with strategies if you're accepting a lot of the risk yourself as an individual, because essentially the risk there is you buy all these, you pump the price up, and nobody buys them.
Yeah.
So we're fine with that as well. What do you guys think about people who get on NFT projects at the beginning where the hype goes massive? They paper hand, which everyone says paper hands, but I think these people probably make a lot more money in the long term than the people who diamond hand. But they paper hand. Do you think that that's okay? Shilling a project. Pardon?
You calling me out as a diamond hand?
No. What I'm saying is, are you guys all right with someone jumping on a project, hyping it up, getting all this stuff, even though they know as soon as they get on that mint they're selling?
Yeah, I think it's like a common thing anyway. Like at the end of the day, everyone has strategies, and you have to stand by your strategies or like try different strategies. Like for the first time, I've never actually done the paper sell straight away because I'm either an idiot or I believe in the project. That's the thing.
Well, no,
that's a bit of both. A bit of column A, a bit of column B.
Yeah.
Right. So next one is where we actually start to get a little bit dodgier. Do we think it's right to be able to short currencies, assets, etc.?
No, but you can make a hell of a lot of money if everyone's doing it. And I recently had some luck, and I've been like sharing my things with you. And in the short for like when I was first in crypto and crypto was going down, I was like, why is everyone posting all this money? Why am I losing money? I didn't understand, because my money was sitting on exchanges, centralized exchanges, because everyone does it at first. And that actually works against you. That provides liquidity for people to short you and stuff like that. I didn't understand. Sell high. And and then I realized it's like, end of the day, if I want to make some money, I need to put my emotions aside. And if everyone else is doing it, and they don't care about you, so you might as well join the bandwagon. Moral or not, but
I need to take a lesson from you, Stash. I get way too emotional about my stuff. Yeah. I recently had to sell 10,000 of my VeChain, and that was very tough for me. But I guess it paid off because I managed to buy the blockalizer with it, which then got me Ghost Boy, which Ghost Boy pumped to 0.4, but Ghost Boy is now down to what? 0.08.
0.08. No, 0. Yeah.
So,
that's fine.
I mean,
sorry, Chris, did you not sell your blockalizer after mint?
After mint?
Yeah, after they said, "Oh, you're in the mint."
No.
Oh dear.
You sold yours?
Sold it, boys. I made a profit on that one.
Oh, you never told us that.
That's because I'm fucking with you. I'm a diamond hand with you, boys. It was good acting, though, wasn't it?
It was good acting. I was like, wow, he actually learned from it.
No, mate. I'm a loser, just like me. Look, Chris has taught me everything I need.
I think you learned from the wrong person.
I didn't teach you. This is a specific skill that you either have or you don't have.
Chris, I looked around at all your NFTs. Remember that graveyard of art? And I thought, I want this. I will kill for this. No. Right, so we're happy with the shorties as well.
For the low price of, I don't know, I think I probably put like 3 into all that stuff as well.
Right, so this, boys, is now where we get onto the ones that I think are a bit dodgier.
Okay.
What do we think about projects like Strong or Drip that are...
Scam.
So, right.
Wait, explain what they are first.
Okay. So the way that Strong and Drip work is a little bit like pyramid schemes or multi-level marketing. So if you set up so Strong was nodes as a service. So what that meant essentially was you were running a node, but you never ran the software. It was like a virtual node that paid out. So what you did was you essentially would buy a node. So you would trade 10 ETH or whatever for 10 strong. These numbers are wrong, but 10 ETH for 10 strong. Then you send 10 strong to this address, and then you then own a node. You will get paid out something in the region of like 1% of what you put in per day, right? With the idea that you reinvest when you get hit another 10 strong. Okay? So you can reinvest and then get 1% of that new amount. Does that make sense?
Yeah.
So the more people that joined in, and you could get people in like your, I think Drip works. You can have people in like your.
So before you continue, when you reach that 10 strong, could you take that 10 strong out and continue?
So they would pay you the strong straight to your MetaMask. So let's say you put 10, you converted 10 ETH to 10 strong. For simplicity, we'll say 1 strong is 1 ETH. You put 10 in, and they would send you 0.1 ETH or 0.1 strong, sorry, every
1% of that. So after 100 days, you've made your money back.
Yes, they would send that to you every single day, and you could at that point convert it back to Ethereum and sell it.
And you could take out 20.
You can never take your stake out. So that first bit, you're not staking. You're paying to get in.
Okay.
That initial stake is gone because it's not a stake. So you're buying a node, then you get paid out. So the idea is that if you stay in long enough, or if you're high enough off of the reverse funnel system, it looks like this. If you're high enough of the reverse funnel system,
Well,
sort of like a pyramid shape,
like a triangle.
yeah, like a triangle. If you got in early enough, or you're high enough, or you can get other people in your down chain because some of them you get like if you introduce other people, you get like a bit of their upflow.
Okay, so
yeah, sort of triangular. Yeah, like think like Egyptian triangles. So, but
okay,
but
okay. What are they called again?
I can't remember. But if you got in early enough, you could make way more than your 1% a day, because you'd make your 1% a day plus 0.5% of what everyone beneath you was doing as well. And just bear this in mind as well, Chris, right? So when you buy your initial Strong, let's say it was worth 1 ETH when you bought it, right? But because Strong is getting more popular, the price of Strong quadruples, right? So suddenly, instead of getting paid out 1% a day, you're getting paid out 4% plus another whatever percent from everyone beneath you.
Yeah.
Right.
Whereas they're all making less because I got them in.
Yes.
And then
Well,
can they get?
Sorry. They still make 1%. They still make 1% as you make 1%, but somebody above you who introduced you to it is getting your 0.5. Do you see what I mean?
So, and then if I introduce someone else, I get their 0.5.
Yes, and they keep their 1.
If I introduce someone else, they get 0.5
yes.
of theirs.
Mm-hmm.
So it goes from like here, one person, and then 2 people.
Yes, and the more people, so if you introduce someone, they've got loads of people behind them, you're obviously getting a percentage of what they bring in, so it all builds up.
Okay.
Right, so that's how that functions, right?
Yeah, that sounds perfectly fine to me.
And as the value of Strong then went up, people could have been making, depending on how much you put in, you could have made thousands and thousands per day.
People are making, I was watching YouTube videos, people were making 10K a day.
But the problem was, Chris, this is the big problem. You're encouraged to reinvest. So that Strong that you could have converted to ETH, don't do that. No, don't do that, because you're making so much money. Reinvest it, and next month you'll make even more, right? Forever. And that'll go on forever. And that's what was happening, was all these people who were making 10K a day were reinvesting, right? And at the end of it, Strong plummets and they get a K out. But
the clever people actually took their money out, right?
The people who run the pyramid scheme did. The people who run the scheme at the top.
Pyramid scheme.
The people who. We think about this, Chris. It's hilarious, right? Just think about this, okay? So you make a token, right? People buy it, they send it to you, and then you sell it to someone else.
Oh my God,
because that's what you're doing. You're selling your own token back, and the guys in the middle are just making a load of money. And yeah, so tokens like that. Now the reality on those is you could make lots of money.
Okay, so the consensus is pyramid scheme, right?
Right, yeah, but see, I'm going to link this round, right? So you could make loads of money, but it's at the expense of other people, okay? Mm-hmm. Other ordinary people. And lots of people lost out, right? Do we think that actually doing that sort of thing is fine?
You got to do your due diligence. A lot of people went on the hype. I remember I got burned a bit on other node projects. I lost, I don't know, $500 buying up nodes and shit like that. But this was true. Like, if you're early to the projects, people made tens of thousands. And I was like mid, and I was like, oh, I made loads. And I reinvested or lost every single bit.
Well, there was someone here, Stash, and then some more people there, and then you were like down here.
Not all of them worked like that entirely.
No.
But like some of them, like Stash's one, potentially he didn't have anyone like downstream.
It was on a completely different, separate. Everyone, you just buy a node, you get paid out. But obviously, people's liquidity, people paying in, buying the notes made the price more, but then people were selling, and then more people were buying, and then the price. Yeah, it's just. It took me a while to realize it was a scam.
So, well, mate, it took a lot of people a long time to realize how that was working. So, but do we think getting involved in those things is fine?
If you know the risks.
If you know the risks, I will
if
say.
you know the risks.
Have you seen there's a video on YouTube of a guy who went onto Dragon's Den to try and sell a pyramid for the dragons.
I don't feel like those people are going to fall for that.
Yeah, exactly. So my sort of thing is, sure, go for it if you want to, but just know that chances are you're going to lose your money.
Yeah. So my question with that is, right, so that there is, the reason why we think it's a bit morally off is because regular ordinary people are losing out, yeah?
Well, not necessarily. It's that the system is created in a way that screws over the person.
People, yeah.
It's not that normal people are losing out. Normal people will lose out every day. You've seen my crypto wallet. You've seen. But yeah, it's more of the fact that the system is rigged against you if you get in late, right?
Mm-hmm.
My question now, boys, is that not the same as every NFT launch? That actually,
No.
the issues you've just raised there, right? So the people who get in late get screwed. The people who set up the project normally win. And then the people who are early make a good bit of profit. Because to me, the bits that we think are morally ambiguous about that are almost exactly what we see on every NFT launch.
Yeah, but
it's different.
NFTs are more like an asset. NFT prices
pitch to me how this is different.
Speculation and like a community.
So not at one point, like, so let's say Bored Ape Yacht Club, right? They did the Mutant Apes, right? People who owned a Bored Ape got airdropped a Mutant Ape, which they then sold on. I saw Mutant Apes at like 3 ETH, I remember. A couple of my friends or people that I knew bought at 3 ETH, right? You could buy whenever, right? So you could have bought it at 3 ETH. Sure, it's gone up to 15 ETH now. But there have been periods where it's gone down to 10 ETH and it's gone back up to 15 ETH, right? So as a fluctuating asset with a legitimate company behind it, right?
Yeah.
Or I'm trying to say like it's not automatically screwing over the person that gets in last because there is no necessary end to it, right?
Yeah. No, I hear exactly what you're saying, mate. What you're saying is, in a pyramid scheme, the people who get in last always lose.
Yes.
Whereas what you're saying is, you could get in late, you could buy a Mutant 8 for 10 ETH and still sell it for 15. Because actually... Yeah,
it depends really because it's fluctuating so much. Like, I don't know, another example is, what was it? Only one or whatever. They had a whole period where it went up to like 2 ETH. It was crazy. Like everyone, it was so hyped up, and then it dropped and it went down to like 0.4, 0.5, and now it's back up to 1.1. Like, it fluctuates so much that there's no necessary point at which you're going to get in at the bottom, right? You're going to be the guy that loses. Sure, there's going to be a guy that loses the most because he bought at 2 ETH and now it's at 0.4 or whatever. But now it's at 0.11. I don't know. Maybe I'm rambling. Maybe I'm sounding stupid.
No, I hear exactly what you're saying. But my question on that would be, for the majority of the projects, that never comes. So if we took, for example, something like Ghost Boy, right? Pretty typical NFT launch, yeah? A lot of hype. Pre-reveal mint. People try really hard to get onto the mint. Pre-reveal happens. Price fluctuates massively. Reveal happens. Some people sell for 10 ETH. That was like the most expensive one, so for something like 10 ETH, right? Then of that, the rest of it will peter down until it's worth minimal. That's pretty much almost every NFT project, yeah?
But then it goes down to minimal at a point where they're not necessarily showing what they're doing. And as soon as they release more information about what they're doing, about what they're building, right?
Yeah.
Then traction starts gaining again, right? It's all about valuing, like, there's got to be trust, obviously, with the founders. You've got to trust them to deliver on the project. And a lot of people that get in at high prices are going to be like, look, this asset that I bought, unnamed asset, I bought it at £2. It's now worth 50p. I'm going to cut my losses and take the 50p.
Yeah.
Whereas, and they don't necessarily look that much into like what's going on in the background, because the whole reason why it goes down is because of inactivity, whereas a lot could be going on in the background depending on the project, obviously.
I completely hear what you're saying. I was just gonna take an interest. I'm just gonna have a quick look on OpenSea and just have a look at like what's like a medium project, like one that's successful, like a Cool Cats or something.
Cool Cats, yeah.
Yeah. So like Cool Cats floor price at the moment is 1.8 ETH. I'm just gonna have a look on the activity and just see if I got all time. So this is really interesting. So when that released, it was trading at like 0.1 ETH, but that went all the way up to average price of 17 ETH, and has then come all the way back down.
How much?
17 ETH was the average price it was selling for.
17.
Yeah,
mad.
And then it hit up again.
I didn't realize it went for that much.
Hit up again months later to 15 ETH, and then since then it's been on a downward trajectory. However, obviously those two spikes were mid 21 and early 22, so the market was an awful lot more buoyant.
Right.
So I just think it's interesting, like looking at that and seeing how it's sort of grown there. But I sort of get what you're saying, like, but Cool Cats is like a big project, but it sort of follows that same trajectory even.
Yeah.
I think the outlier is Bored Apes, isn't it, really?
Yeah.
Because, and then the reason why they're an outlier is that the thing they provide is not pretty pictures of apes. It's consistent monetary payment for having it. Like you said about the mutant apes, like you held on to it, you could have sold it for 10 ETH.
Cool Cats did try to do that with their milk token, which kind of failed, which is another reason why it's gone down to 1.8. However, I have said, and I do stand by the fact that if my Sappy Seal were to get up to 1.8 ETH, I would probably trade it for a Cool Cat.
Interesting. But yeah, I think it's just interesting for me. And the reason why I started that segment, are we happy with bits, was because I looked at a lot of NFT launches recently, and I thought they follow sort of a similar trajectory.
Yeah, I'm not saying, like, obviously I was rambling quite a lot. I'm not saying that all NFT projects are good, I'm not saying that not all NFT projects follow that thing, right? The trajectory that you're describing, but you've got to kind of look for the outliers, for the ones that.
I completely get what you mean, Chris. It's like, because NFTs aren't static, if something were to change in the project, then the price could go up.
Yeah, exactly. It's more like investing in a company, right? When you invest in a company, depending on what they're doing, I don't know, Tesla had the massive bull run and then it went down, stuff like that. Whereas a pyramid scheme is a lot different.
Yeah, no, completely.
There's just so many different varying factors that we just can't all fit in right now. But
yeah,
it is a bit of a. Crazy.
I know that's a left wing sort of topic to bring up, but it's just something I thought about and been thinking about, and just thought, well, let's discuss it on here about sort of where people's morality is, because an awful lot of things in crypto are perfectly legal, but because of how it's structured, can be quite I don't know, deceptive.
Yeah.
No, it's very true. Like, because it's such a still very new industry, everyone's fleshing out the grey areas.
Absolutely. But look, if you don't want to get scammed when you're buying your crypto, you can go get some.
Follow our link down below.
and get some.
Affiliate link.
I just also wanted to mention one thing, like in this bank run on USDC, Ethereum transactions went up to $200. And this further points my view why we need layer 2s, because for the first time ever, the most expensive arbitrary transaction for me has been pennies. And I paid, in a bit of a panic, I sold my USDC for $3, essentially in gas fees. If I had my USDC on Ethereum and it did collapse, yeah, I would have never been able to afford that.
Yeah.
So it further points out just a
Ethereum gas fees are whack.
Yeah. Layer 2s are the future. Right, boys. The final moment of the podcast should always be Stash's sweet treats.
1 second. I'm coming. I just need to go downstairs.
Oh. See,
Play
after
some
all those
elevator music. Do-do-do.
Oh, we're back in.
Wow, 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 wow.
Ooh.
Right.
Okay.
I know where I'm guessing that's from.
Go on then, James.
That looks like an M&S donut. That's probably not bougie enough for Stash, but I think that looks like an M&S, like a strawberry cheesecake donut is the sort of thing they'd call it.
Okay.
Christopher.
I'm struggling here. I'm going to say Krispy Kreme. Like one of the, I don't know, like a strawberry milk white chocolate sort of thing.
Like, okay, you got the flavor right, but I think these are new, extra special Asda white chocolate strawberry yum donuts.
Asda.
I
But
know.
Stash, you always tell us you hate the people who shop in Asda. Remember you call them scum?
Yeah.
Don't know what you're talking about, guys. But I
can't leave that in.
And I was just like, this is beautiful.
It is beautiful, Stash.
Beautiful.
And it's got like that yum texture. And I love a good yum.
Do you? I don't love a yum that much.
What is wrong with you?
Oh, no, I don't want my donut iced in the entire way around. I prefer like a filled donut, to be honest with you. But yeah. Stash, I know you like Lidl's bakery, but I would never have guessed Asda in a million years.
I know, I needed to die. I was going to go to London, but
He probably
I played dodgeball yesterday against the University of Essex, and we won.
Stash pays dodgeball, and I'm an accountant. These are just things we never talk about.
Well, what's my thing? Losing money.
Yeah. Bad taste, loses money. But do you know what?
Yeah.
A very approachable man who approached both me and Stash at various conferences to make stuff at work, and then continues to approach and bother people at any conference he can attend to further his own media career. I've never met a narcissist like this. All he wants to do is just all the attention on him.
Exactly.
Stash, we originally joked about Chris replacing me and Chris replacing you, but I think at the end of the day, he's going to replace both of us. It'll just be the Chris show. Yeah, yeah,
it'll just be three images.
You'll be chatting to yourself.
Chris will make a point on this screen. He'll agree with himself on that screen. He'll disagree with himself down there.
Running back and forth.
3 different sets just going between it.
Thank you so much for joining this podcast, everyone. This is me, Stash, and these are my wonderful companions. Have a great night. You don't deserve a cut. You don't deserve a cut.
No, the cut's gone. We've mumbled.
I'm joking. Oh
no, leave that in, Chris. Let him round it out.
Yeah.
Stash has spoken. The episode's over.
And me, Chris. That's my thing. And me, Chris.
That's all you're good for.
me, Chris. It's not like a caveman. Me, Chris.
Okay.